whatever contract that we do. And the second is, this being a general law, the government thought it fit that we should come out with a special law for the property transaction. When I talk about property transaction, naturally it can be a movable property or immovable property. So therefore, 1882, after 10 years, we got a Transfer of Property Act 1882. So from General Contract Act, we moved to the Transfer of Property Act, which is more specific to the property. Then in the Property Act, that is the Transfer of Property Act, of course it says that anything related to immovable property need to be duly stamped and registered. And therefore, we got a Indian Stamp Act 1892, and then of course the respective state government started enacting their respective state laws also in relation to the property transaction, that is stamp duty. So in Maharashtra, we have Maharashtra Stamp Act 1958. Then Registration Act, again in the year 1908, we got after 9 years. So the Registration Act, section 17 of the Registration Act makes it very clear that any transaction related to immovable property exceeding 100 rupees need to be compulsory registered. Now the question arises, if there is something to be done under the multi-story building, now how can one occupy the premises in a multi-story building? So there was no law. So I just forgot to mention that the Rent Control Act, which was prevailing in those years, so that was taking shape, and the people who had a land, they would demolish, or they would demolish their bungalow, or those who are having a land, they will construct a multi-story building, and the land will be owned by them, building will be owned by them. They would give on what is called as a tenancy basis. That is how you will find around 30,000 buildings in South Mumbai prior to the the cooperative movement, housing movement. This was given on rental basis. So that is called Pagdi system. What the landowner used to do, they would take the entire amount of the land cost and construction cost and their profit in the form of premium, that is a Pagdi in a cash, and then they used to issue the rental receipt, and that is how the rental scheme was going on. However, a community called Saraswat community, who are from Karnataka, they thought it fit if multi-story building can be done and given the flats on rental basis to various people, and a joint family can own the land and then construct the building, and multi-story buildings and flats can be allotted to various family members. Why not we from a community come together, form a housing society, and buy the land, allot the flats to the members of the housing society, and then move it. So that is how the first cooperative society in entire Asia started in India, that is in Mumbai, in the year 1915, which is known as Cooperative Societies. Under the Cooperative Society in 1912, Saraswat Cooperative Societies Limited. This is in Gurgaon. Then the cooperative society was not taking a good shape because of various lacunas, which I will take you a little later. The developers found it a very good opportunity for them to start a business of under construction and allot the flat under construction, and then of course sell the flats. And then once the flats are sold, position is given, they would go under the formation of society and hand over the conveyance. But there are a lot of lapses, and the builders were taking consumer for a ride. Therefore, Maharashtra Ownership Flat Act was enacted as a special law. Now, if you see, we are moving from the general law to the special law only for under construction property. Transfer of Maharashtra Ownership Flat Act 1963 came into effect. Then in that there was nothing which can address about the grievances. So therefore we got a Consumer Protection Act in the year 1986, where the flat purchasers are considered as a consumer. They could take the help of Consumer Protection Act to take the redressal of any issues related to purchase of the flat. Now the government realized why we should have multiple acts, for the one for the purpose of construction, another for the purpose of redressal of disputes, another for various other reasons. Why not come out with a composite law, which will be again a specialized law for the real estate regulation and development? Why not we have a regulator? Because the developer, in spite of there being a MOPA, there being so much law, that was not sufficient, and therefore Real Estate Regulation and Development Act came in the year 2016. It was started implementing from 1 May 2016, and of course, few provisions were implemented, and thereafter all the provisions were implemented from 1st May 2017. And Maharashtra is the pioneer state where the developments have started. So this is just to give you an overview as to from a General Contract Act moving to the Transfer of Property Act and how we have moved from Maharashtra Ownership Flat Act, Consumer Protection Act to Real Estate Regulation and Development Act 2016. Real Estate Regulation and Development Act takes care of MOFA as well as consumer protection to not only to regulate, and in addition to that there is a regulation mechanism also. Now just to give you perspective how the cooperative society movement started. Since this is normally the two slides take about 4 hours, but since we have only 2 hours session, I'll be going little fast. Now, cooperative society movement started with few people coming together, deciding, a location, budget, and tentative plans. And then they would form a housing society, elect the chief promoter for the formation of society. A core committee would take care, and then they collect the initial contribution. Then they, of course, register the society. Once the society is registered, of course, they are issued a share certificate, a project management consultant is appointed, PMC or architect is appointed, feasibility report is prepared, contributions are collected from the members, budget for per flat is decided, everybody will have the same flat, and plans are approved by the members. Then normally they have to contribute about 20% of the funds, and 80% of the funds would come either from way of bank loan or from the employee. As you know, a lot of banks like SBI, RBI, or NABARD, Indian Airlines, Air India, Income Tax, all these employers also used to facilitate formation of this type of housing societies. So they would become the owner of the land, they will become the owner of the building, and everybody get the position of the flat. They will get the plan passed from the planning authority, appoint a contractor, ensure the supervision. After the building is completed, the entire common areas are managed by the society. They will receive the occupation certificate, hand over the position to the members, and initially around more than 10,000 housing societies are formed in this way. And I can just tell you that in my initial practice, about 30 years back, when I started, nearly 25 to 30 housing societies I myself has formed, and then people have, taken the flats in their name. Now the question arises: if this housing society movement was happening so well, then what made the builders to enter in this area? What happened is the contractors who were trying to get the construction contract, they thought if I need to have the construction contract myself and I need to do this business, they would, start give a token amount and buy few important locations from the landowners, and they would say that okay, we will give you the remaining cost once we identify the housing society who would, buy the land and go for construction. The contractor started executing a package deal. Thereafter, what this contractor used to do, they would say that land is with me. Now my land cost is 100 rupees. Maybe 200 rupees is my construction cost. 300 rupees per square foot. Let us have a package deal. The conveyance will be directly done in the name of the society, so that society can mortgage the land and also the upcoming building to any financial institution or to their their employer, and get the loan released. So this is how contractors started executing the package deal. Government, looking at the way the contractors were holding the land, government thought it fit that we should come out with the urban land ceiling act. They came out with the urban land ceiling act. More than 500 square meter land in the urban area cannot be owned by anybody, and if it is there, it should be used for the economical housing. And accordingly, there were a lot of restrictions. The scarcity of the clear title came into picture. Litigation started happening. Black money introduced in that this real estate transaction. Corruption, underhand transaction started happening even in the approval, because ultimately approval means we were required to go to the ministry level, because under the Urban Land Ceiling Act, we have to go to the Community Authority, which is in Mantralay. So this was creating a lot of issues, and therefore some of the unscrupulous promoters in the housing society also started taking undue advantage. They would collect the money, but they never purchase the land. They would purchase the land in their native place and make their own bungalows. So the people started losing their faith and trust in the promoters. Landowners started entering into development agreement with the contract. The landowner also thought, why I should enter into an MOU with the builder, with the contractor, and then housing society take it over and they make the money. Instead, landowners thought, why not we enter into a development agreement with the contractor in the area sharing basis? or on the revenue basis. And this is how a new business for a contractor started, known as developer. They became a developer. After the approach is taken by these developers by investing some initial money, these landowners who will not be required to take the money, they will get the certain area constructed which they can sell in the open market and they get the money. Or as the sales are happening from there, 30%, 40% revenues are given to the landowners. So they are also happy that they are able to make profit out of it. For individual housing loan, HDFC and other institutions started giving, services of a individual housing loan. The construction by the builder started. Thereafter, once the permission is given and people occupy the premises, the developer would form a housing society for managing the common areas due the conveyance. However, all this was, well conceptualized and it was a very good concept. However, there were again some unscrupulous builders who started taking undue advantage of the flat owners. They were suppressing the flat owners, and that is why the Maharashtra government thought it. This is the first government which thought that why not we come out with a new law to regulate this under construction activity. And that is how Maharashtra Ownership Flat Act came into picture. So the construction activity started booming in the year 1960. Flat owners were not protected; they were unprotected. Builders took full undue advantage. Many irregularities surfaced, and therefore government implemented the new law, which is known as MOFA. What is the purpose of the MOFA and what it wants to achieve? Very simple. It wanted to achieve and give the statutory right to the flat buyers. It wanted to give the building relevant documents, whether it is a land or construction relevant documents to the builders, or rather relevant documents to the what you call flat purchasers. And this was one of the mandate in Section 3. Then get the agreement registered in a specific format. This is form number 5, which is given in the rules, MOFA rules. And again, the agreement has to be registered once you make more than 20% payment. And very importantly, the property also need to be managed and maintained till the society is formed. So this is how we could see that MOFA was more of a protective this one for the flat buyer, and it was more of making the builders liable for consequences. So the question arises where this MOFA is applicable. MOFA is applicable across India, sorry, Maharashtra, with Maharashtra Ownership Flat Act. Looking at the success ratio of Maharashtra under construction property under MOFA, the other states like Gujarat, of course, Karnataka, even in the northern states, they started adopting the provisions of MOFA. They call it as Gujarat Ownership Flat Act, Karnataka Ownership Flat Act. This way, every state started adopting the Maharashtra Ownership Flat Act. Now, as far as MOFA is concerned, applicable across Maharashtra, all connected central and state government laws are applicable. It is related to freehold and leasehold, and it is connected with the plan. So the very important question is, MOFA is construction related with the under construction flats, sale of under construction flats. Now under MOFA, we have a statutory obligation, we have a contractual obligation. There are two important things which need to be seen. The one is a contract where the agreements can be entered into, the terms and conditions can be made, there is a specific format, it has to be registered, the flat considerations are mentioned there, the possession has to be handed over on a specific date, all amenities are specified. This can be called as a contractual obligation, what is mentioned in the agreement for sale. Now the question arises, if this is what is mentioned in the agreement, then what are statutory obligations? The statutory obligation is the one which is mentioned in the MOFA. What is mentioned in the Maharashtra Ownership Flat Act can be considered as a statutory obligation. What are the statutory obligations? First is, as I said, Section 4 says, once you receive more than 20% or even to receive more than 20%, you have to register the agreement for sale under the Indian Registration Act. Of course, pay the applicable stamp duty. Complete the building in all respects. This is also one of the requirements under MOFA. Then provide OC building completion certificate. You have to provide the building completion occupation certificate. Provide common areas, water connection, electric connections, and disclose all the information. Provide all the documents, accounts, registration, legal, and providing conveyance. All these documents need to be provided. Conveyance has to be given. These are all statutory obligations. Whatever you are saying in Section 3, what you are disclosing to the people, you need to give. This is how this is. Now the question arises. If the MOFA has been so good, why the RERA has come into picture? Naturally, the MOFA had inherent problem. The inherent problem in the MOFA is nothing but there was no enforcement mechanism. It was more of a wish list as to what developers should do, what authorities should do, how it will happen. But then who will monitor, who will supervise? There is no nothing called competent authority to manage this. So therefore, there was section 10 which says that in the MOFA that the builder has to provide society formation or a company or a condominium. Society may be under Society Act, Maharashtra Society Act. Company can be under Companies Act or condominium under Apartment Act. There can be other legal entities like associations under Society Registration Act, trust firms, all this. Now, Maharashtra Ownership Act absolutely says that once you receive more than, once the society is formed within 4 months, you have to convey the land and building. So conveyance has to be done, otherwise it will be deemed to have been conveyed. This provision also was made in the year 2008. Section 13 of MOFA is very clear. It says that non-convenience or not giving the society permission or any violation of the this one is amounting to an offence, and there can be penalty, and then of course there can be imprisonment of 3 years, and in the case of a defraud the imprisonment has been increased to 5 years. So therefore it was realized that we need to have a common authority to at least take care of very important provision of section 5 where a separate account has to maintain for the money which has been received under various heading by the promoter. Section 10, register of the society. Under section 11 to get the accounts, you know, properly to get the conveyance done. So till 2005, when of course, for the first time when the Lok Sabha, Assembly passed the law. So in the year 2005, there were only till 2005, it was only civil court where one can go to the specific relief act, get the remedy done for the MOFA relation, or you could go to the consumer court, or you can go under the criminal court and get the builder prosecuted. We had three legal remedies. But in the 2005, amendment was done in the case MOFA. What was the purpose of the amendment? The amendment was to give a constitutional authority, that is a common authority. Of course, it was converted into Act in the year 2008 when the President gave the assent. District Deputy Registrar is appointed as a common authority, that is very important. And in the year 2010, rules are made. So what is this common authority does? Common authority very specifically does 4 jobs under MOFA. What are the 4 jobs which MOFA does? Under MOFA, common authority does. There is district deputy registrar. One, disclosure of the information of money collected for a particular purpose. If any money has been collected for a particular purpose, let us say you have collected stamp duty, registration, society maintenance charges, society formation charges, or conveyance charges, or property tax, all these need to be used only for that purpose. You need to keep a separate account and you need to give a detailed account of it. If the builder does not give that, you can go to the district registrar, get it disclosed. Under section 10, formation of legal entity to manage the common service area facility after disposing of. Now it is 51%, earlier it was 60%. So society is required to be formed once you sell more than 51% units. Under section 11, you have to convey the land and building. And suppose if these are the things not done, one can go to the common authority and get the things done. So this is the beauty of appointing a common authority. But this was only limited to 3 or 4 sections. So therefore, a need arises that we need to have a common authority or a regulator to manage and take care of every statutory obligation which builder has to do. So therefore, a RERA has come into effect. MOFA took a shape of Maharashtra Housing Regulation and Development Act 2012. Again, Maharashtra is the pioneer state where Maharashtra Housing and Regulation Act was enacted in the year 2012. I was fortunate to give a lot of presentation to the select committee of the MLS, where a special committee was set up, where I could give a lot of suggestions. Now, realizing that Maharashtra is moving towards the Maharashtra Housing and Regulation Act, the central government also thought it fit. Why not we come out with a law on a real estate applicable throughout the India? And that is how the bill was started in the year 2013 onwards, and in 2015 a lot of amendments happened. And thereafter, in the year 2016, this became a law by making a publication in the government gazette on 26 March 2006. Then the respective government was required to make the rules, and accordingly, Maharashtra also has made the rules and well as regulation. This can be in nutshell as far as journey is concerned. Now, many people ask me a very simple question. Mr. Prabhu, if MOFA was there and there is a community authority who has been appointed, the roles could have been extended to the same community authority, then why we had to come out with the law? The law was like this. Though there was a MOFA highly unregulated, there was no transferring, no information, no easy retrieval, no delay in position, OC, so many challenges were there. The builders used to demand in cash, so not following the society, not giving conveyance, not agreed amenities, no maintenance, selling parking in the open. There's a fraud, cheating. Even you will be surprised to know that more than 3 lakhs buildings in Maharashtra even today are standing without the occupation certificate. Flats are sold under imaginary area, that means the super built up area. So this is how one can see that the lot of things are happening. So therefore, government thought it. Why not, improvise the MOFA where there was no enforcement mechanism? Why not we come out with the enforcement mechanism? And that is how RERA has come into it. What is the RERA? The objects of the RERA is very simple. One is regulation and development, transparency and efficiency, and third is protecting the consumer interest. These are the three most pillar or most important things which RERA has taken part. Now, when to achieve this, a regulatory authority has been set up that is called RERA, and if the RERA is taking certain decisions on any grievances, on any actions or any orders are passed, and people are not happy with that, you could go for a judicial forum, that is an appellate tribunal. So this is how we could see that there is an appellate tribunal also. RERA, in order to help them, they can also appoint an adjudicating officer to adjudicate the compensation payable to the allottees or to the builder for any violations. So this is how the entire scheme of RERA came into it. We call it as a RERA, but it is the full heading is Real Estate Regulation and Development Act 2016. Now, as I was saying, so now let us come to the central and state government. Central government enacted the law, state government notified the rules, and then within 6 months they were supposed to do the rules, and then of course establish the authority or the appellate tribunal within 1 year. So therefore, Maharashtra, MP, everybody published the rules also. They established the authority also. The main job of a regulator, that is a RERA, is to register the real estate project which are upcoming in the various parts of the respective states, register the real estate agent who would like to market those, monitor, supervise, and redress the disputes of the real estate sectors, control and protect all the stakeholders. The RERA, no doubt, the objective is to protect the interests of the consumer, but at the end of the day, it has to protect all the stakeholders. So the builder's interest is also taken care, estate agent's interest is also taken care. Now, question arises: the RERA has come into effect from 1st May 2017. Can we say that RERA is a prospective law? The answer is yes. The RERA is a prospective law. It does not have a retrospective effect. Any project which has completed and where the occupation certificate has been given, in that case, RERA is not applicable. Now, the question arises before the parliament or even to the lawmakers whether we should take up the projects which are under construction. Because what happens is the projects which are about 5 years old, 6 years old, which have started long back. So there was a lot of debate. And at the end of the day, it was realized that no, if ongoing projects are not taken care, then it may be giving a lot of injustice to those people. And therefore, law introduced that anything which is ongoing project where the OC has not come, where the completion has not happened, where the position has not handed over, such projects will be considered as an ongoing project and they will be taken up as made part of the what is known as RERA. And that is how the ongoing project is required to be registered and they are brought into aspect. The next question comes: commercial, residential, plotting, everything is covered under it. So if I have to talk about real estate law, yes, it's a mother of real estate law. It is applicable all over India except Jammu and Kashmir, which was the original provision. But now, after the removal of Article 370, and now it is applicable to Jammu and Kashmir also. There the rules are getting implemented. It is implemented to the respective state government, and it is again, as I said, MOFA is related to freehold and leasehold. Similarly, RERA is also applicable for freehold and leasehold. It is concerned with the flat. When I say concerned with the flat, this MOFA was concerned only with the flat. Now it is concerned, the word used is the apartment. Apartment and flat, there is no difference, it is same. Only the word has been changed here, but it also includes plotted development. It also includes building development. So that means if someone is buying the entire building, there also RERA is applicable. So it is applicable for plotted development. This is how the RERA is applicable across India, and the origin of RERA, that is the applicability of the RERA, has been expanded. Now the question comes, what do you mean by apartment? Very simple, residential, commercial, garage, bungalow, industrial, office, rows, everywhere which is going to be under construction, that is called apartment, self-contained units, everything is covered under RERA. What are the functions of RERA? Very simple. Functions of RERA, one is the administrative function. When I say administration, there are again twofold. One is of the administration of the officers of the RERA or their employees to take care of their administration. The second is administration of the RERA by the RERA of a real estate project. The real estate project which are going to be done by various promoters across Maharashtra or across that particular state, that need to be monitored. That administration has to be taken, and this administration is also done by RERA. The RERA, as I said, has a judicial function. What are the judicial function of RERA? One, the aggrieved person, whether it is a promoter, any aggrieved person, promoter or a builder or maybe landowner, maybe estate agent or maybe allotee, anybody can under Section 31 make a complaint before RERA. And Section 36 and orders also can be passed. Under 37, you can give the directions, and under 39, any order or the direction which has been given, if it can be rectified or reviewed. So this is how judicial functions are given to it. The next arises question is very important: advisory role. When I say advisory role, Section 32 and 32 and 33 of RERA gives us the advisory role, where they can advise to the central and the state government, and that is how you can see Swami Fund 25,000 crores, which has been done by the central government for the stalled project, is based on the advice given by the RERA, because all RERA registered projects where it is stalled, where the projects are more than 30% complete, they are given funding by the central government through the Swami Fund, through SBI. Then the question arises: judicial function. If there is a judicial function, orders are passed. Those orders need to be implemented. Who will implement those orders? Naturally, the RERA also has been given the power under Section 30 to implement its own order. So once the implementation takes place, thereafter, of course, regulatory functions. There is Section 34 and 35 of RERA, where there is a regulatory function. So this is how one could see that RERA is doing a lot of functions who are accountable under RERA. You can see there is a landowner, architect, engineer, chartered accountant, engineer professionals. Then from the party, estate agent and customer, there is a lot. They are all made accountable under RERA. Just to give you further perspective of this, I can make this slide as a promoter, one set. There is a landowner and builder. Second is the allotee, which is flat buyers, which can be single or a group. And then the third segment, which is related, is the real estate agent, professionals. Under MOFA, real estate agents and professionals or contractor agencies were not made accountable and responsible. Now under RERA, we are made accountable and responsible. So therefore, one has to see that estate agents are also accountable and responsible. Professionals are accountable and responsible. I can say that this has been tested even up to the Honorable High Court, Bombay High Court. where architect was convicted and the Bombay High Court said, yes, if a professional has given a wrong certificate and because of which the allottees are suffering, then that professional need to be accountable. In, in Gujarat, what happened is chartered accountant give a certificate where the allottees have given the money that was treated as a unsecured loan, and names of the allottees were not shown in the website. And when the allottees made a complaint to the Rera, Gujarat Rera, the chartered accountant was called and he was asked, how come you have done this type of mistake? How can you certify the amount paid by the allottee for booking the flat where there is allotment letter and other things you are shown as an unsecured loan? He said the promoter gave us the information based on that we have prepared the statement. The Gujarat Era, of course, chairman demanded and asked, what is the professional skill that you have used? If there has to be third party confirmation which you should have taken, you should have gone to the various correspondence and other things. Now you have failed in duty, so therefore a disciplinary action was initiated against the chartered accountant for giving a wrong certificate. So that is how professionals are made accountable and responsible under RERA. So as I said, promoter or a allottee, they can be individual, firm, company, associate persons, government, semi-government. Now under MOFA, just to give you, that was more of a private builders were considered. Under RERA, we have government, semi-government, DMC, SIDCO, anybody and everybody, MADA, anybody and everybody is constructing, selling, whether it is affordable housing, whether it is a concessional housing, whether it is subsidized housing, everybody is covered under RERA. So therefore, RERA has a bigger perspective and larger perspective, and the scope is big. So this is working of MOFA which we have seen. In the case of RERA, we have a regulator, the projects are accredited, it is registered, there is a mandatory disclosure of the information in the website of the RERA. The promoters are given a lot of obligation. Promoters have to comply with so many things. Obligations of the allottees are given in the RERA. The authority to act as a nodal agency, there is a power to make the rules given to the state government. Act is made by the central government. Regulations and directions are given by the RERA. This is how everybody's powers are distributed. Dispute redressal, there is again a system of redressal of disputes, and most important is penal provision. That means there is a lot of penalties which are being levied under RERA. So, if I have to give you only 5 snapshots as to what is the silent features of that, one, get the project registered even before sale. Real estate agent, one who wants to sell the real estate project, he has to get registered. One can file the complaint for any disputes. Financial discipline, where the chartered accountants come into picture and where our professional accounting also come into picture. There is a financial discipline. RERA is saying that the land and building, any money that is received from the allotee out of 70% money should be used only for land cost and building cost, construction cost. And that can be certified by chartered accountant. So he has to monitor and supervise and then give the withdrawal certificate. That is a financial discipline and there is an audit also. And very important, RERA brings more of transparency. That is also equally important. There's going to be transparency, there's going to be consumer oriented, and that is how one can see that RERA has become very important medium in the real estate transaction. So, registration, responsible promoter, he has to register the project, he has to give the declaration that by what time he will complete the project. Yes, the projects are clear and marketable. Then 70% money he will deposit in the RERA desk account. There will be no advertisement without the registration. And if he has done any wrong commitment, and there is obligations on the RERA. So promoter veracity in the advertisement, all that need to be done under section 12. It says that any misinformation, the promoter will be held responsible. So that is how the obligations and responsibilities are cast on the promoter. Now very simple. We already discussed who is the promoter. Promoter can be a landowner, one who has caused the construction, a builder, a contractor. But in layman language, I can say it is a builder who constructs and sells the apartment. Now I'll come to the section 3 almost. Till now, I've given you a small synopsis or overview as to how the RERA is functioning, what was the need of RERA. Now let us come section 3 onwards, the obligations of the promoter. Now what is the obligation of the promoter? Section 3 to section 18, these are very important sections which we will deal with one by one. And in this dealing, you will know that every section gives us a professional opportunity. Because registering a project is not a simple job. It involves a lot of intricacies and you need a lot of exposure. A project simply if it is registered without proper understanding, then it is going to create a lot of issues for the not only for the promoter and in due course of time, allotee may create more of issues. So therefore, the registration of project we have divided into two parts. One is a new project and one is an ongoing project. Now, new project, before sale of any flat, apartment, or building, one has to see that the project is registered with RERA. Section 3, subsection 1 says, no promoter shall sell, market, advertise, or transfer, or otherwise do anything related to the any apartment or a building or a plot in any real estate project unless until the same is registered with the regulatory authority. So that means every project requires to be registered. Then let us understand from the general provision. There can be exception. We'll discuss the exception a little later. But the section 3, subsection 1 clearly says every project has to be registered. Without registration of the project by the promoter, he cannot do any marketing, advertisement, sales. Now, as far as section 3, 1 gives a provision. What is the provision? Provided provision is always an exception. Provided further that where the project is ongoing, which is incomplete, where the completion certificate is not obtained and the building is going on, in that case, the project should be registered within 3 months from the commencement of the act. When is the law commenced? The law commenced on 1st May 2017. So that means ongoing project they were required to register by 31st July 2017. Anybody who registered thereafter, they were levied a penalty. Then, of course, Section 9 gives a real estate agent registration. So this is how registration of real estate agent and new project and ongoing project. Now, just to give you further, Section 3, subsection 2 gives us exceptions. What are the exceptions? There are three exceptions. As I said, Section 3, subsection 1 gives that every project where there is no OC and where within 3 months they are required to be registered. New project has to be registered before offering for the sale. But there are certain projects which are exempted from registration. Now the question arises, if those projects are exempted from registration, does it mean that the RERA is not applicable to them? The answer is no. The RERA is applicable to them, but only thing they are exempted from carrying out registration activity and the compliance related to the registration. But otherwise, entire provisions of the RERA is applicable even to the projects which are not registered. This is my personal view. The question is still to be answered by the Honorable High Court, which we may come to know in due course of time. The question arises, then what are the exempted projects from registration? One, if the area of the project is less than 500 square meter or the number of units are less than 8, they are not required to be registered. All the projects where there is a completion certificate, where there is a occupation certificate, which is granted prior to the registration of the society, commencement of the act, they are not required to be registered. And the last and most important, if there is a project where there is no sales happening, for example, there is a building, there is a, let us say there are only 10 members and housing society is there. Now they are going to construct the new building, but they are not going to invite 11th person. Only those 10 people will contribute, they will make the house, and the entire building will be allocated in 10 people. In that case, you are not required to get registration under RERA. So this is how section 3 subsection 2 gives us not registering anything contained in any act or in any provisions. So they are not, these three types of projects does not require registration. Now section 4. Now I am going as I said section wise up to section 18. Section 4 says that what are the information need to be submitted at the time of registration with Rera. As I said, it's a complicated process. One has to understand how the project has to be registered, what are the information to be given. There are a lot of compliance, a lot of compilation has to be done, and of course, CS certificate is required, architect, engineer certificate is required. So, if this all required, then the professional opportunities are also available with us. So one has to give the details of the promoter, who is the promoter, what is his constitution, who is the authorized person, where is the project coming in, where is the land detail. All this after giving this size and layout. If there is to be registered in phase wise, then the phase wise registration detail will be there. He has to give the title and land free from encumbrances, specimen of the agreement, sale deed or conveyance deed, allotment letter. All these details need to be uploaded on the website. Secondly, project to be completed as per the terms of the registration scheme of the completion, schedule of completion. That means he has to give an undertaking that project will be completed within so and so time. So then he has to give the schedule of the completion, how and what we will do. Then project is to be completed in a period specified. Whatever is the given period at the time of registration of the project, or at the approval is given. Let us say you are given an approval that within 5 years you have to complete the building and get the occupation certificate. Then you have to complete within that given time. The last and most important is 70% of the money which is issued from the allotment that need to be deposited in the Rera Destiny account in a scheduled bank, and to meet the various expenses. The expenses can be only two things: land cost and construction. You cannot use the 70% of the allottee's money for other than the land cost and construction cost. This is how the section 4 talks about. Now let us come to section 5 and 6. Section 5 says, 51A, you have to get the, once you make an application online, because everything is now online. Once you make the online application, then registration has to be granted. Rera registration has to be granted within 30 days. If at all there is any communication is not issued within 30 days, then it is considered that it is deemed to have been registered. 5 subsection 2, deemed registration after the lapse of 30 days. In the initial, when the registration happened on 31st July 2017, nearly about 10,000 applications came in, and all that need to be processed within 30 days. So therefore, what the Marera did, that everybody was granted registration without doing much verification. However, Section 5.1, Section B says that in case you are not able to give the registration within 30 days, then you can always reject. And we have seen nowadays that if there are any lapses, immediately you get the email from the authority that these are the lapses or these are the pending documents, and they send it back to us without registering. And this is how the cycle goes. Once it is registered or deemed to have registered, we get a registration number, we get a certificate sent by the email as well as uploaded on the website, and then login and password. And for accessing the website, that is also being done, and that is how things can be seen. So that is how things are done, and login and password for accessing the website is given, and of course that is through the login and password which we create, same thing is given to us. And then the period of registration as provided by the promoter will be mentioned in the certificate, that this certificate is valid till 3 years, 5 years, 10 years, whatever is the period which is demanded by the promoter. Now the question arises, suppose a project is registered for a period of 5 years. Let us say I registered in the year 2015 and then I have to complete in 2020. Now, in 2020, your project is not completed. Does it mean that am I entitled to get an extension? The answer is yes, you are entitled to get an extension. Extension can be under Section 6 for a further period of 1 year. Now, question arises before the Honorable High Court, Bombay High Court. This entire era was challenged in different high courts. Then the matter traveled to Supreme Court, and then the Supreme Court said that let the Bombay High Court decide about all the petitions. And that is how on 6th December 2017, a celebrity judgment has been given by the Honorable High Court. The judgment is about 330 pages. Every sections of the NERA was challenged, and especially Section 3, which is related to ongoing registration, project registration, and Section 6 related to the extension. It was all said that The getting the project registration itself is a difficult and ongoing project which is started about 3 years back, 5 years back when the Rera was not there. How can we register it? And extension is given only for 1 year. So this is also arbitrary. If that demands more, then how it is Rera also authority also cannot give. But the Honorable High Court said Section 7, which is there, which has got a revocation of registration or a continuation of registration, wherein Real Estate Regulatory Authority can allow the registration to be continued for a more than the required period with certain terms and conditions. And even if required, authority can also revoke the registration. Therefore, Honorable Authority, High Court said that 1 year may be not a compulsory, but if the authority decides that it should be given more time, the more time can be given by the authority. This is clarified by the Honorable High Court. So, therefore, now the question arises under Section 7. A project can be cancelled. Who can cancel the project registration? Naturally, by the regulatory authority, RERA. Who can, on what basis? On the basis of the complaint by any stakeholders. If there is any complaint that there is an unfair trade practice, promoter is not doing the way it is required, so in that case it can be, cancelled. Again, the RERA on so mode also can do, or on the basis of the recommendation of the common authority, or on the basis of the audit information. If the authority comes to know there's a lot of fraud happening, a lot of illegalities happening, or even a competent authority comes to know who is the competent authority. Competent authority means the planning authority. They come to know a particular promoter has registered with the RERA, let us say for 3 floors, and approval is also for 3 floors. He is constructing 5th floor and trying to sell in the name of a registered project. Then that entire registration can be cancelled. What will happen to the consequence of revocation and the lapses of registration? In case the project is revoked or the registration is left, what happens? This is very important. If the project is revoked, then of course promoter is debarred from execution of the project. Also, he is prohibited from what is known as accessing the website. Complete the project by assuming allotee or any other manner. So the project has to be. This becomes an obligation on the what is known as promote this authority, that is the RERA, to complete the project, either through the associate or by appointing some other promoter, or by through the common authority like BMC, MADA, or any other authority or CIRCO. Declare the promoter as a defaulter and display his photographs in all the states, so that the fraud committed in one state we should not go and repeat in other states. So the 70% money which is put in a RERA design account, as I said, 70% money which is issued from the consumers has to be put in a RERA design account, and that money also, whatever is available, will be transferred to the new promoter or to the authority by the RERA, so that that will be available for disposal. Section 9, as I said, yes, no unregistered real estate agent shall facilitate the sale of registered project. Section 9 says every real estate project agent who wants to market the registered real estate project need to naturally register. What are the functions of real estate agent? Very simple. He has not to facilitate sale of unregistered project. What happened is in the beginning, a real estate agent, Chambur Estate Consultants Private Limited, what he did was he started marketing in the initial, that is in the month of May, June. I think in the month of May itself, after the RERA came in, and he got himself registered. Once he registered, he started selling the flats of an unregistered project. He had put lot of hoarding. Then the Marera came to know, and so much they took the cognizance, and then the penalty was levied, 10,000 rupees per day, and 12 days this was going on. So therefore, 1,20,000 penalty was levied. So that is how you cannot make the sale of an unregistered project. Maintain the books of account as prescribed under the Income Tax Act, not to involve in the unfair trade practice, facilitate all the information, documentation, and any other functions which may be prescribed in the rules or by way of circular. All this need to be done by the estate agent. So now we have completed chapter number 2 related to registration of a project and registration of a real estate agent. Now let us come to the functions of promoter under chapter 3, which is related to obligations of the promoter. As I said, section 3, 4 up to 10 we have discussed. You have to register the project before applying for the same under section 3. You have to upload various information of the promoter, project details and other things under section 4. You have to deposit 70% of the allotted money in a Rera Desing account, separate account. You have to give the affidavit to that effect, declaration to that effect, inform the that you will use this money only for the land cost and construction cost. That is very important. And in order to withdraw the money from the Rera Desing account, you will be taking a certificate from the architect, engineer, and chartered accountant. Architect will give the percentage of the work completed. Engineer will give the money which is invested in the project, estimate of the money invested in the project, and chartered accountant will carry out the inspection of the books of account, and he will certify how much money has been utilized in the project as per the books of account, and then of course he will carry out the audit. So this is how a chartered accountant also gets the professional opportunity. This certificate is required at the time of registration and the time of withdrawal of the money, and all this is required. So therefore, we have to see that the at the time of withdrawing the money from the Rera Desing account, so 70% of money which is put in the Rera Desing account can be used only for land cost and construction cost. This is a big financial discipline, a big compliance which has to be done, and where the chartered accountant gets a huge opportunity. Thereafter, within 6 months from the close of the financial year, we have to carry out the audit also. Disclose all the details of the project to the customer. See, under section 11, it says any information which is given by the promoter at the time of registration of the project, all this information need to be uploaded on the website. Rera, a real estate regulatory as a website, in that it should be uploaded, it should be disclosed. Next, it also says that there has to be quarterly returns. Quarterly, what are the number of flats booked, what are the garage books, what are the various approvals issued in that quarter, everything should be uploaded. Very importantly, the society also need to be formed. Section 11, subsequent 4 provides various other obligations, and one of the obligations is also to form the society once majority of the flats are sold and conveyance and other things has to be done. Then section 12, one of the other, now if you look at all these obligations which are cast under section 11, also the professional opportunity for a chartered accountant. One can look at the compliance. Because at the end of the day, the business promoter builder, they are ready to do the business, any businessman. But when it comes to the compliance, they have to rely on people like you and me. Chartered accountant who has got all the hold of the books of account, and they have been carrying out their income tax work and accounting and suggestion, advice. So therefore, it becomes easier for them to approach their chartered accountant. So this is the one major advantage. Section 12 says liable for promoter will be liable for damaging any misinformation given in the advertisement. Whatever you are giving in the advertisement, you need to comply them. If there is any defect in the advertisement, whatever you have said in the advertisement, if you are not delivering, then you can be made liable for misinformation. You have to register the agreement. The agreement need to be registered before you receive more than 10%. So it is very important how it is consumer oriented, because in any project, minimum 30 to 40% is the land cost, and remaining maybe around 20 to 30% is about construction cost. And of course, out of 30%, maybe another 10-15% profit, and 10-15% is marketing and administrative expenses. So that is how the RERA says 70% is towards land cost and construction cost. Land cost itself is more than 30-35% or 40%. But if a person is paying only 10%, his agreement has to be registered. And thereafter, once the agreement is registered, of course, the right title interest goes to the consumer. Then if you have to cancel, then of course, you may have to go through the cancellation process. So therefore, it is 100% consumer oriented. Then very important, you have seen that why it is again consumer oriented, because the moment you sell more than 50% of the flat, you have to promote or form a co-living society or a sociology who will monitor and supervise. And that is how the alert is also coming to picture. Adhere to the approved plans and project specification. Promoter is liable for 5 years defect liability. So section 14 says, adhere to the approved plans and protect the specification. Promoter is liable for 5 years defect liability. So that means section 14, there are three sections. Let me elaborate this because this is very important for us. The first and foremost, section 14, subsection 1 says that the promoter shall carry out the construction as per the approved plan. There cannot be no deviation. It cannot construct beyond the approved plan. The second very important thing is section 14 subsection 2 says if there is going to be any amendment in the plan which has been uploaded on the website and how the flats have been booked, then two-third allotment consent is required. Without taking two-third allotment consent, no amendment in the plan is possible. Therefore, the promoter need to be very, forthcoming, and he need to think in the line of future, and then he has to prepare the plan properly. Then subsection 3 of section 14 says that if there is any defect in the workmanship or any defects in the construction, workmanship, or anything related to structure or leakage or anything, then within 30 days from the date of intimation by the allotee, that need to be rectified. And if it is not rectified, then of course the allotee has a chance to ask for the compensation. He may rectify, and any damage which has been caused, it can be recovered. And what is the period? The period is 5 years from the date of, you know, giving the position. Section 15 says NOC from two-third allot is required if you want to transfer the project title or part of the title or part of the share to somebody else. So no transfer in the right title interest in the project can be transferred by the promoter to any third party without taking two-third allottee's consent and also the approval from the authority. So the authority approval is important. Now you may wonder why this restriction. Very simple. Because you are booking a flat based on the promoter's detail, their track record. And after everything is done, and then you hand over this project to one third party, right, to a contractor or a builder who does not have any reputation, then where the allottees will go. So therefore, two-third allottees consent is very important, and even the authority also need to give the approval. Now, section 16 talks about taking the insurance of title as well as building. So title insurance has now become a part of the Rera rules. One has to take the title insurance and also building insurance. Once the building is completed, the title insurance and as well as building insurance need to be assigned to the associate. Section 17, very important. You have to transfer the land and building title to the associate within 3 months of receiving of the OC. Once you receive the OC, you have to transfer the title within 3 months. Then section 18 talks about refund, compensation and interest on refund. This is a very important section because a lot of more than I would say 40% of complaints are filed under section 18. Now what does this section 18 talks about? Section 18 says refund, compensation and interest on refund. Whose default? Promoter's default. What is the default? The default is not giving the possession of the premises or the flat or the apartment which has been agreed in the agreement. As per the terms of the agreement, if the possession is not given within that day, then the allottee is entitled to do something. The allottee gets the right, and it becomes the obligation on the promoter. What is the right? The first and foremost thing, if the promoter fails to give the position as agreed in the agreement on that particular specific date, then the allottee has a right under section 18. There are again three sections like section 14. Now let us see which are the three subsections. Section 18 subsection 1. It says if the allottees are not getting the position with completion as agreed in the agreement on a particular date, then the allottee can withdraw from the project. he can exit from the scheme. Now, if he exits from the scheme, what he gets, the moment he exits from the scheme, he gets his money, he gets his interest, and also he gets the compensation for any additional loss which he has incurred. What is the interest? Interest is also specified. Interest is the charge by the allotee, and interest charged to the allotee for the default in payment, and the interest which will have been paid on the refund are going to be the same. There cannot be two different rate of interest, because we have seen number of agreements where the promoter charges 24% interest, and when it comes to the refund, it says 6% interest. So this type of discrimination is not possible. Interest is specified, that has to be said. Secondly, the rule provides in the section 18, it provides as per the rules. The rules provide, Marina rule says that it will be MCLR, that is a marginal cost of lending rate, highest MCLR of SBI, State Bank of India, at a particular time, plus 2% penalty. So this is the interest that has to be paid. So many projects, they get delayed, and therefore many people file the application for refund along with the interest and compensation. The next comes about the compensation. As I said, section 71, 72 of the Rera provides for the compensation which has to be paid. So when we talk about the compensation which is payable, is again decided by the adjudicating officer. Now, the second is, then it is not that everybody wants to exit from the scheme, because you have selected the scheme, you have seen the locality, the building is 80% complete. Maybe it was promised that by 31st December 2018 it will be given. Now you are in 2020, still you want to see that, you want to proceed with that. In that case, any money that you have paid as an allotee to the promoter from the date of default, that is, let us say 31st December 2018 was the deadline. From 1st January 2019, whatever money you have paid to the promoter, on that you get the interest as a compensation. What is the interest as a compensation? That is again SBI's highest marginal cost of lending rate plus 2%. So MCLR plus 2% of the SBI becomes the interest payable on monthly basis to the allotee. So this is how the promoters are made accountable and responsible. Then once you register the project under RERA and you are agreed the date of possession in the agreement, you have to adhere to that. Otherwise, it can be huge consequences. And let me tell you, lot of complaints have been filed for the people who have not been receiving position, and they are asked for the interest for the delayed position. I have myself seen number of cases where I have filed and the people have paid 50 lakh rupees, and the interest which they are getting for the delayed portion is also actually 50 lakhs, which means virtually their flat is becoming free. If you say that, no, not that, because ultimately, because of the delay, they have paid the bank interest, they have taken the bank loan, which they have paid to the financial institution. Further, they have paid also the rent for the delayed portion. So therefore, there is absolutely nothing which allotee is gaining. However, it is a burden on the promoter. So therefore, builder will have to be very careful when he is giving the date of possession. So now let me come to the very important screen, which says that working of RERA. How the working of RERA is happening? Working of RERA happens like this: that earlier in MOFA there was no uh, delivery mechanism or enforcement mechanism. Now we have a real estate regulatory authority to ensure compliance and enforcement. This is very important. We have an appellate tribunal where we can go in the appeal. There is a common authority who will be doing the planning, and there is an adjudicating officer who will be giving us the compensation. So this is how the working of RERA. We now have a regulator. Just to give you an example, there may be traffic rules. You may be having a lot of traffic rules, but if there is no CC camera, or there is no constable who regulates and finds who is jumping the signal or who is breaking the traffic rules and levying the penalty, in that case, it becomes very difficult for the people to adhere to traffic rules, and they don't adhere. That is what exactly used to happen during the pre-RERA or during the MOFA period. So therefore, I call it as a pre-RERA period, because post-RERA, we have a regulator, we have a constable who can find out and levy the penalty. So the question now is very important. Does Real Estate Regulatory Authority is a separate approval authority? Absolutely no. The approval is done by the municipal corporation, local authority. There is a set rules, there is a development control regulations, everything is as it is. There is nothing new which is happening. What is the new happening? The RERA now has become like a SEBI, a special screening authority. In the case of a SEBI, we know Security Exchange Board of India, where before the shares are marketed or offered for the public for subscription, the SEBI takes all the details and then it gives the approval. Thereafter, it can be published. Same way, it is not an approval authority for the planning and other things, but it takes all the information from the promoter, collects all the information, then approval documents, and then of course it executes the real estate project and gets involved in the granting the registration and then redressal of the dispute. Anything related to the real estate transaction between the promoter, allottees, and then of course real estate agent. These transactions they try to uh, you know uh, address the disputes. Now, earlier we had a promoter who would take the approval from the community planning authority and then directly sell to the purchaser. Now we have an intermediary who will take care of the promoter's, obligations and also will see that all the complaints are done. Secondly, it takes care of the allottees for any grievances. Now, REDA or RERA, because we call it as RERA in short form, but actually it is RERA because Real Estate Regulation and Development Act 2016. Now it has 10 chapters. There are 92 sections. So if I have to go through each of the chapters, it will be very difficult. As I said, it is a time consuming. We have done the RERA course in WRC for 4 days continuously. Only on RERA, real estate, we have done 4 days and only we are discussing about RERA, nothing else. So therefore, it is not that easy for us to deal with every section. However, let us look at the overview. Section 1 and 2 is related to preliminary. Section 1, what is the law? When it is applicable? Section 2, of course, 44 definitions. Chapter 2, we have seen real estate registration and registration of real estate agent, which we have seen. Section 3 to 10, we have seen in detail. Functions and duties of the promoter is very important because section 11 to 18, which is giving us the entire compliances. That is section 3 to 18 are all related to the compliances which need to be done by the promoter and real estate agent, where the chartered accountants as a professionals we can help them. Then comes section 19, chapter 4, the duties of the rights and duties of the allotment. Chapter 5, Real Estate Regulatory Authority, their constitution, their roles and responsibilities, and hearing the complaints and their minutes. Central Advisory Council, section 41 and 42. Real Estate Appellate Tribunal, how will be the functions of the Real Estate Appellate Tribunal, their constitution. Offences, penalty and education is very important because section 59 to 72 is talking about offences, penalty and adjudication, how much compensation penalty is to be paid. Then of course finance accounts and audit and reports is very simple, 73 to 78 as to how the real estate regulatory being a corporate body will receive the money, what type of money will come, what type of accounts will be done, how the annual report will be done, who will carry out the audit. That is related again the internal, we may not be too much serious on that. And last chapter is section 79 to 92. So this gives us miscellaneous functions. Let us go chapter wise and maybe 1 or 2 slides for each chapter I will deal with so that in next 15 minutes I should be completing the overview of RERA. Rights of the allotee? Yes. The allotee has a right for the information and documents to receive. It could be sanction plan, documents of insurance, anything, all the information he can get. Right to obtain the certificate, completion certificate, occupation certificate, lease certificate, conveyance certificate. Right to claim compensation and breach of agreement, defective title, he has a right. And if there is any, as I said, defects in the, defects in the workmanship, yes, they can ask for the compensation. Right to withdraw from the project, yes, as I said, if there is changes in the plan and if it is what has been advertised has not been given, and you can withdraw from the project also. And if it is not delivered within the given time, and right to execute the registration of Satekat. That means sale deed. If you have paid more than 10%, you can always demand the registration of the agreement. What are the duties? Before booking, you see that builder has got registered the project, not to buy the apartment which is not registered with Rera, and then of course not to pay more than 10% unless until the agreement is registered. These are very important things. To make necessary payments as per the agreement and interest for delay thereon. If the payments are done properly as per the agreement, no issue. Otherwise, it is your duty to pay the interest for the delayed payment also. Participate in the formation of the association of allotee or society. Participate in the registration of conveyance deed. Take the physical position within 2 months of receiving the application certificate. Once you are offered for the position, within 2 months you have to take. Now the next question comes authorities. We have already discussed. Section 41 to 42 is related to Central Advisory Council. The Central Advisory Council is to only advise the state and central government or the Rera as to what they need to do for the purpose of development. Rera is section 20 to 40. These are the authorities will, of course, constituted by the government, respective state government, to implement the provisions of the Rera. Then appellate tribunal to hear the grievances of the allottees, promoter, or the estate agent on the orders placed by the or by any other person order against the order passed by the Rera. Then High Court is the second appeal lies before the Honorable High Court. In the question of law, whenever any question of law comes, it is before the Honorable High Court. Adjudicating officer section 71 to 72. As I said, Rera can appoint an adjudicating officer who is not below the rank of district judge, who will see the compensation payable for the delayed position or one who wants to exceed. If there is any advertisement where he has changed the plan, in the advertisement something has been promised but it is not being delivered, or maybe there is a defect in the construction, all this compensation can be demanded from the adjudicating officer. This is how the regulatory system or the authorities are set up under him. Now let us come to chapter 5. Chapter 4 is related to the, we have seen, it is related to the rights and duties of the allottees. Section 5, chapter 5 is establishing the real estate regulatory authority. Here, select committee appoints 3 people. One is the chairman and another 2 people. And select committee appointed by the appropriate government means state government. In the case of unit the central government, they appoint one chairman and 2 members, and then that is how the establishment of the regulatory authority happens. The functions of regulatory authority we have already discussed. This is related to the adjudication, dispute redressal, promoter granting the registration, maintaining the website, compliances. Then regulations and rule making is another thing, and the last is consumers. So the consumer benefit, the standardization of construction, whatever is required for the consumer benefit, this is done by the regulator. Powers of the regulatory authority, very simple. All the powers of the civil courts are available. They can appoint the arbitrator. They can set up a redressal, dispute redressal mechanism. Power of the regulatory authority is to appoint any person, inquiry, adjudicating officer. As I said, we can appoint any person. They can delegate their powers other than the rule making. Revocation of registration, ensure the completion of the project. This is very important. And issue the directions. So this is how the power of the regulatory authority. Establishment of Central Advisory Council. Yes, we have seen in this chapter, section 41 and 42. There is a Central Advisory Council consisting of Housing Minister of the central government as a chairman, and then all the central government, various ministry people are there, and state governments representatives and Rera representatives, Housing, Urban, National Housing and Planning Commission, Law and Judiciary, all these people are there. In addition to that, there are 10 representatives from the customers, there is consumers, builders, and estate agents. So this is how Central Advisory Council is set up. Now, what are the functions of Central Advisory Council? Very important. Implement the provisions of the Rera, policy regarding real estate sector, protecting consumer interest, post of the goods in real estate sector, any other duty and functions. So when when COVID happened, the Central Advisory Council met and they said that minimum 6 months extension should be given. In addition to giving 6 months extension, if the real estate regulatory authority decides that it has to be given another 3 months, they can give. So that is how the every Rera has been given 6 months. Every Rera has given 6 months extension based on the Central Advisory Council to all the Rera registered projects automatically, and another 3 months, of course, they can give on case-to-case basis. Then comes establishment of appellate tribunal. Yes, there again one judicial member who is a High Court judge, who will be, High Court judge will be the chairman, and select committee appoints one judicial member, and again it can be one technical or administrative member. This way, even the appellate tribunal consists of three people, where there are majority are from the judicial, because the appellate tribunal consists of more of a judicial function. It is treated as judicial function, and Rera is considered as a quasi-judicial authority. So I'm not getting into it. So powers of the appellate tribunal, as we have said, here all the appeals which have been filed, they are not bound by the Civil Procedure Code. They are not bound by Evidence Act. They are not bound by any restrictions. However, they can regulate their own provisions and how the procedure has to be done. They can adjudicate the dispute between promoter, allotee, between promoter and the regulatory authority. All this can be resolved. And very importantly, real estate agent also they can solve. And any aggrieved person again against whom the orders are passed by the RERA, so there is appellate tribunal or adjudicating officer, they can come before the applicant. Very important, appeal has to be filed within 60 days from the date of receiving the order. Very important, the RERA or the appellate tribunal have to decide the matter within 60 days from the date of filing the complaint or filing the appeal. However, if there is more time is required, then of course they can always give the reasons and extent. Nowadays, I need to tell you practically, it takes 6 to 9 months to get the order in RERA, and around 1.5 years in the appellate tribunal. The right of legal representation is another opportunity for a chartered accountant or a cost accountant, company secretary, and advocates. Now you can, as a chartered accountant, we can represent before RERA. Just to give you, out of 5 days in a week, with the RERA and appellate tribunals are functioning, at least 3 days, I am always, always, I do it. Yeah. So the always what happens is only 1 minute. So the chartered accountants are authorized to represent. As I was saying, out of 5 days in the week, 3 days I am either in the RERA appellate tribunal or in the RERA. So my area of practice has been focused on the representation side also. This is one of the good area one can work on it. And as you see further, the RERA also has given us the very important opportunity of networking practice. How that networking can happen, I will be elaborating it later. So when we say professional can represent on both the sides, you can represent on behalf of promoter or the estate agent, you can represent at the time of registration of the project before the authority, represent before the appellate tribunal, represent before the adjudicating officer, represent before the any inquiry officers. So on behalf of the allotee or behalf of the estate agent or behalf of the promoter, anything is possible. So the last part of my presentation today is related to the penalties. Very importantly, we need to understand that contravention of sections is, section 3. Contravention of the section 3, that means not registering the project and then selling the flat, leads to 10% of the cost of the project as a penalty. So this is a huge penalty. Penal provision is a draconian provisions in this RERA. So if still it is not registered, even after the order, you can be imprisoned for a period of 3 years, or a penalty of again additional 10% can be levied. Section 60 says providing any false information under section 4 at the time of registration of RERA. Therefore, the auditor's involvement is very much required. So penalty up to 5% of the cost of the project can be made. Contravention of any other provisions of the Act, penalty up to 5% of the cost of the project. So these are the very important things one has to look into. And non-registration by estate agent or contravention under section 9 and 10 also leads to 10,000 rupees per day as a penalty. And it can go up to 5% of the cost of the plot or flat or apartment which has been sold. So this is again a huge penalty on the estate agent. He must be giving 2% commission, but if he does something illegally, it can lead to 5%. Then failure to comply with the orders of the authority by the promoter, penalty for every day during which the default continues, which may be cumulatively up to 5% of the cost of the project. Next is about failure to comply with the orders of the appellate tribunal by the promoter. If the appellate tribunal order is also not complied, there can be imprisonment of 3 years or a fine, and the fine can go up to 10% of the cost of the project. You will be surprised to know that more than 1,800 promoters are already penalized on various reasons, and the penalty, highest penalty so far levied in Maharashtra, is 6 crores. 6 crores penalty has been levied, that too for not registering the project within time. The cost of the project was 300 crore, and Rera said we can charge you 10%, which means 30 crore, as against 300 crore project. However, they levied only 2%. And just because a Rera number was not properly displayed in the advertisement, Rera has levied a penalty of 50 lakh rupees. Just imagine the huge penalty, and they have paid. So therefore, one has to be very careful because that is for the promoter. One who is doing a business, he has to get the compliance done very well and properly through the profession. Failure to comply with the orders of the authority of the real estate agent, penalty every day. As I said, if you fail to comply with the order, penalty for every day during which the default continues can be charged any amount, and then it can be maximum can be again cumulatively up to 5% of the cost of it. Further penalty, yes, failure to comply with the order by the real estate agent. Again, there is a penalty of, you know, appellate tribunal order is not fulfilled by the real estate agent. Yes, there can be again imprisonment of 1 year or penalty which can go up to 10% of the cost of the flat. Failure to complete the allotee. If the allotee also fails, there also they have to pay 5% up to 5% of the cost of the flat as a penalty. And if you, as a allotee, we are not completing or complying with the order of the appellate tribunal, then the imprisonment of 1 year is there. So again, see, because it is a judicial order, if you don't comply with the judicial order, it becomes a contempt, and therefore 1 year imprisonment or a fine with up to 10% of the cost or both, as the case may be. Section 69 is offence committed by company. If the company has committed an offence, yes, every director, officer, manager who is liable to discharge the duty will be considered. As I was saying, section 70, 71, 72. Section 70 is compounding of the offence. In case there is some criminal act which has been done by the promoter where the imprisonment happens or the allotee where the imprisonment happens, in that case, such offences can be compounded by levying a penalty, and the penalty is equivalent to the uh, for compounding whatever the penalty is amount is charged, that equals to the penalty. Levying whatever the penalty that is prescribed or described right now, it will be same. Just to give you an example, in case project is not registered, 10% penalty can be levied after cost of the project. And even after giving you the so-called notice and then asking you to register the project and you are not complying with the order, then imprisonment of, let us say, 3 years can be done. Let us say 6 months imprisonment and 10% of the cost of the project is levied. And now 1 year imprisonment or 6 months imprisonment is done. You want to compound that. Then under section 70, you will have to pay another 10%. This way, just by not doing a registration, a penalty can go up to 30% of the cost of the project. So therefore, one has to be very careful. Adjudicating officer, section 12, that is a not giving the misinformation in the advertisement. Section 14, carrying out the alteration without tutor allotee consent. Section 18 for delayed position, and section 19 for, of course, not complying with the what has been agreed and committed by the promoter as per the agreement. All these, if there is any default, then adjudicating officer can award the compensation either to the allotee or to the promoter as the case may be. Section 72 gives various factors to be considered for education. So this is how, in overview, I have tried to give. Now, arrangement of clauses regarding finance, accounts, and audit. I think we are not very keen on that. What will be the grant government, central government? What will be happening? Grant state government, constitution of the fund, and any penalty which is recovered will go to the government only. and credit of sum realized by way of penalties in a consolidated fund of India or the state government as the case may be. Budget accounts audit, how it should be done is given section 77 and annual report. So I'm not getting too much on this because these are all related to the internal functions of the authority. Now let me straight away come to the some miscellaneous functions. Yes, bar of jurisdiction by the civil court. Cognizance offence, not court other than the authority or not court inferior to the metropolitan magistrate or can decide about the cognizance of offence. Civil court is barred. One may go in the consumer court or they may go in NCLT because NCLT has an overriding effect. But other than that, you cannot go to the civil court. Delegation of power, yes, under section 81, authority can delegate the powers other than the rule making to any person. Power of the appropriate to supersede the authority. If the authority has done some wrong thing, yes, you can supersede. Power of the appropriate to issue the directions and other things. The appropriate government has the powers to issue the directions to the authority and obtain the reports returns. Power of the appropriate government to make the rules, yes, under section 84, rules can be made. So this is how power to make regulations with authority is lying with the authority. Regulations are made with the authority, and I can only tell you that section 92 is talking about repealing Maharashtra Housing and Regulation and Development Act 2004. So Maharashtra Housing and Regulation Act, which was enacted by the Maharashtra government, that also has been removed. So this is how you can see all 92 sections I have tried to touch upon. And now the question arises, what are the professional opportunities? One, CA can help for the registration of the project. All this activity need to be done. CA can help in the registry of the project, coordinate with the various professionals, uploading the information, do the regular updating, and providing the list of the documents written, compilation of the data, study the verification of the data, uploading the information. All this can be done. Preparation of the declaration in Form B. All compliances related to the registration of the project can be done. Project tracking and uploading the information, quarterly returns, guiding the Rera compliance, complying with the orders, all that can be done by the staff department. Drafting of the various documents, uploading of the informations, and it should be allotment letter, agreement for sale, conveyance deed, booking letter, everything can be done by the, uh, you know, the retainer service can be done by the CA. Chartered accountant can become a retainer and consultancy on management of the fund because 70% of the money has to be used for the land cost and construction cost. You may have to prepare a project report, cash flow statement, how the projects can be completed and how the money can be utilized in a proper perspective, how the appropriation can happen if the same materials are issued and one lot of material has come, if there are three different projects, you have one engineer who is monitoring about three, four projects, how the bifurcation and allotment or appropriation can happen, all this can be done. Of course, you have got the form number 3 and of course form number 3 and form number 5, which of course we'll discuss regarding the withdrawal of the funds from the decision account and to carry out the audit. So preparation of annual statements, yes, audit is another thing which has to be done. You need to prepare an annual statement of 70% money which has been issued from the allotee, how it has been withdrawn, how it has been utilized, all this will come. And this is the picture where I had an opportunity to meet Rashtrapati at Rashtrapati Bhavan, where of course I was discussing in the year 2012 about the various things related to MOFA as well as Rera and Housing Regulations Act and how it is affecting and all this is there and my some of the books which I had carried, I gave the presentation to Rashtrapati at that time. Thank you very much and my wife and two children and one of course has become a chartered accountant, other is in the process of becoming a CA. Thank you very much. This is my book which was released by Prithviraj Chauhan at Shanmukaran, where I also delivered a talk on Beam Conveys. This is Gautam Chatterjee, earlier of course, Rera chairman. Now Ajay Mehta has become the chairman, and other central person is Sitaram Kunte, who is now the chief secretary of government of Maharashtra. So with this, I can only tell you that I have tried to give you the notes because Ashutosh was very uh, clear that whatever notes need to be given, I have prepared certain notes which I hope has been circulated to you. If it is not circulated, yes, he will circulate to you. This PPT also is with you. You can go through that. It gives you a lot of insights, and about 50-page notes are there. But if you really want to study that 50-page notes plus, if you are able to download the RIT petition 2737 of 2017, which is Neil Kamal Realtors versus Union of India, which is we call it as a celebrity judgment. If you are able to read that, I compare. I think you can master Rera. With this, thank you very much. And if you want a lot of videos, of course, the way this is also uploaded in the YouTube, there are many videos which are uploaded on the video in the YouTube. You can take the help of this. Thank you very much. If you have any questions, most welcome. I have another part of the presentation also, which I will of course try to complete as early as possible. If you have any questions, you can definitely ask me so that we can move. If any questions related to the overview of Rera, otherwise I'll move to the second presentation related to certification and audit. Yeah, Shraddha, you think anybody has any questions?
Anyone have any questions?
You can put in the chat box or you can ask. Or should I go to the next part of my presentation?
Sir, you can proceed ahead. No one have any questions right now.
Okay. I will move to the next part of the presentation. Yeah. Okay. Okay, I think you are able to see it.
Yes, sir. Okay.
Signed out. Just why you are not able to see? Are you able to see?
No, sir. No, sir. Your
Sharing
screen
is
is not visible.
Yeah, I'm.
It will take some time, I think.
Why this? No, not that. There is some technical error. Let me see. Yeah, now you are able to see.
Okay, done.
Yeah.
Sir, just
Okay.
okay, fine. Yes.
Okay. Now, as I said, these certificates are the formats which are already prescribed in the regulations. There are form number 1, 2, 3, 4, and 5. Out of these 5 forms, only form number 3 and form number 5 is related to chartered accountant, and form number 1 is of architect, 2 is of the engineer, and third is of the architect. Sorry, engineer. Third is of the chartered accountant, fourth is of the architect. So 1 and 4 is of the architect, 2 is the engineer. So this is as per the regulations. So I'll try to explain the format only important points so that we are within the time. So these certificates have to be issued by the project architect, project engineer, and of course chartered accountant engaged by the promoter. Now form number 1 is the architect certificate. What he gives? This is a format given certificate of percentage of completion of the work. What do we mean by percentage of the work completed? The format prescribes 10 various activities which need to be done by the promoter as per the plan, and then it gives the architect to certify how much excavation has been, how much podium has been done, how much stilt has been done, how much superstructure has been done. All these activity wise, the percentage is given. So he says, I have verified, I have been assigned, and then I have gone through, and this is the percentage of work done, and these are the various technical people who is appointed by the promoter. This way, informations are given, and then he says that yes, table A in the building, in that particular wing which he is certifying, related to excavation, how much percentage is done, number of basement and plinth, how much is done, number of podium, how much is done, and then steel floor, number of slabs, superstructure, and then internal wall, internal plaster, then sanitary fitting, staircase, and then of course the external plumbing, installation of it. All these 10 activity, how much percentage has been done is being worked out in table. Then in table B, the outside the building, but within the compound, like for example, internal road pathways, water supply, sewerage. There are 13 activities which have been listed, which are called internal and external development. So, which again, whether it is proposed, if it is proposed, how much work has been completed, percentage of the work completed, and then of course, yeah. So, therefore, we have to see the important things. Only 1 minute. Huh? फायनल आहे ना मी थांबतो आल्यावर मला फोन करा मग येतो मी Okay. So internal roads, pathways, water supply, sewerage, storm waters, landscaping, street lighting. So these are the certificates given by the architect. Now, as a chartered accountant, we need to believe or verify these certificates which are given so that it helps. If there are certain other options like you have done a clubhouse, you have firefighting system, you have something else, you want to write it here, all that can be written here. So there is a open space, there is a gym, there is a various other amenities which are normally given, all can be given here. Then form number 2, a similar thing which is related to the architect is giving about the percentage of the work and engineer is giving about the certificate of cost income. He is only going to estimate after the verifying the site how much money must have been spent or what is the money required to be spent to make the work as per the architect certificate. So much work has been completed, percentage. Now, how much money must have been spent related to the labor, related to the construction, and that is given certificate. Again, table A and table B. Table A talks about, again, all professionals detail will be written, and then table A talks about what was the total estimated work for the building or that particular building, how much is the cost so far incurred based on the inspection, and how much is work done in percentage. Let us say estimated cost is 100 crores and cost incurred so far is 25 crore. Then we know that work done in percentage is 25%. This is how the estimate is worked out. Balance cost to be incurred is of course 75 crores and the cost incurred on additional. In addition to that, what is estimated, if there is additional work has been carried out in addition to the, let us say, load leveling outside the building, something has been done which was not estimated earlier, that can be written here. And table B, yes, again, as I said, the table A talks about that particular wing of the building, and table B talks about outside the building. See, outside the building, again, what is the total estimated cost? Then how much is incurred? How much percentage has been done? And balance to be incurred. So this is again table B gives the specification. If there are any additional costs incurred other than what was estimated earlier, yes, that will be mentioned here. So this is how the engineer gives the certificate. Now this is very important for us as a chartered accountant. Now this certificate 3 is given on the letterhead of a chartered accountant, and when this certificate is given, again this certificate has got only two components. The way in the engineer and architect we have table A and table B. In the case of a chartered accountant, we have table A, I would say it as a land cost, and table B is related to the land development cost. That is a construction cost. In table A, land cost. What is the land cost? Is it a book value? Is it an agreement value? Is it as per the, what should be taken? Earlier, there was a lot of confusion, and therefore, now the rules have been amended, and it says value of the land as ascertained from the annual statement of rate. That means, what do you mean by annual statement of rate? annual statement of rate means ready reckoning. What is mentioned in the ready reckoning? And if you see this column, we have two columns. One is the estimated column, one is the incurred column. Does a chartered accountant is required to certify the estimated column? Answer is no. This estimation is given by the promoter, and we need to write one small note that estimates are not certified by us, and this has been taken as provided by the promoter. So therefore, we need not qualify about the estimated. However, incurred column, yes, based on the books of account and based on the various supporting, because at the end of the day, we as a chartered accountants are going to verify and support. Therefore, in the incurred column, we have to say how much is the value of the land as ascertained from the annual statement of rate. If it is estimated as per the ready reckoner value, then of course incurred also will be the same. If there are amount payable, maybe estimation, let us say 10 crore we have estimated, premium payable for the FSI, additional FSI, fungible FSI, and other things. In that case, if it is 10 crores or 20 crores, whatever is estimated, then what exactly is income? Because premiums are paid in installment. So as and when you pay, that will be written in the income column, and for which of course receipts and other things and records will be verified. Bank statement will be verified. Acquisition cost of the TDR if it is there, or any other premium that is paid to the state government or central government or stamp duty, land revenue premium paid, and if there is a slum redevelopment or rehabilitation which has to be done, you provide for the existing people some house, and then because of that you are allowed to construct additional floors and additional FSI. In that, whatever money you are spending on the rebuilding, that is also considered as the amount of land cost. So, what will be the land cost? The amount that is spent. So all this will become a part of land cost. If there is any rent payable, if there is any clearance that should be done, any amount is payable, all this becomes part of land cost. This is all serial number one. We are talking about the land cost. If there is any interest which is paid, borrowed for purchasing the land, then interest paid also borrowed for the purpose of constructing, then that also for the purpose of constructing the rear portion, that also will be added. So that is how we get a total land cost. Then development cost, yes, the development, whatever is related to the construction, certified by the engineer, he will give estimate column. And then of course in the income column, the chartered accountant will verify the books of account. Whichever is lower will be taken on the income column. Now you may ask, is it possible? Yes, because the engineer certifies as per the physical side, and we chartered accountant verify as per the books of account. Let us say as per the books of account, 100 tons of steel has come, 100 tons of cement has come, and at the site, let us say only 2 tons are used. So in that case, the engineer will certify only for 2 tons, and then the labor cost. Whereas in the case of incurred in the books of account, it may be for 100 tons. So therefore, there can be variation. In that case, minimum has to be taken. Now you may say, am I required to verify, go through? Yes, you need to verify everything. You need to follow the normal verification procedures, and of course, it's all based on the Rera provisions. Therefore, accounting sense may not be used, accounting standards and all may not be followed, but what is provided in the act need to be said. Payment of taxes, cess fees also will be there, and then of course we have interest paid to the financial institution and NBFCs. If we have done some money lenders, any interest which has been paid, that also can be for the purpose of construction finance. So this is how the total estimated cost comes. So we have now got land cost, we have got a construction cost. Then once we have got this, then what happens is proportion of the cost incurred. So next is the total amount. So the total amount incurred will come land cost and construction cost. Then proportion of the cost incurred land as well as construction, how much is that? That also will come. Portion of the land cost incurred and construction cost incurred, which is in the this one. Then amount which can be withdrawn. The amount that can be withdrawn is nothing but the total of what we have spent towards land cost and construction cost is the amount that can be withdrawn. Then less amount withdrawn till date, till date, suppose in the Rera dressing room, whatever money is there, whatever you have withdrawn from the Rera dressing room, that will be mentioned here, and that amount that can be withdrawn. So this is how the percentage is worked out. This certificate of chartered accountant is given. Now, next certificate is related to architect. On the completion of the building, architect will give form number 4. That building is completed as per the OC issue. And then, of course, form number 5. Now, in form number 5, again, there are two important items need to be seen. What are the two important items? Report on the statement of accounts on the project utilization. This is a statement of account. This account, this is again a certificate. It is not a audit report as such. However, this certificate says that we have received all the information that we have received, and then we are certifying the two important figures. What are the two important figures? What is the 70% money issued from the allotee, and what is the that from the 70% money, how much money has been spent? This is what we certify. So therefore, it says that amount collected. If you see the last para, or I will get into the one by one. Para number 1 says this is an audit report. Para number 1, this certificate is issued in accordance with the provisions of Rera. That is fine. I have obtained all the information, explanation, company during the course of the audit, which in my opinion were important for issuing this certificate. Third things, I hereby confirm that we have examined the prescribed books of accounts, whatever is prescribed in the income tax and all that books we have to verify, relevant records of the promoter, and I certify. So it is a certificate, but certificate issued after verification and doing after verification and audit. So whether third party confirmation is required, the answer is yes. Whether we need to do all the audit procedures, yes, you need to do. Otherwise, you may end up in trouble because we are going to certify as a trustee. So promoter has completed the project and the realization number so and so. Amount collected during the year. Say, let us say financial year in which you are doing the audit, 1920. Then how much money has come in the year 1920? Then amount collected till date. There is a confusion. Till date means not the date of the certificate. Till date means suppose project started in the year 2015. From 2015 till 31st March 2020, whatever is the year we are talking about, 1920. So therefore, up to 31st March 2020, what is the money collected, that will be mentioned. Next is amount withdrawn during the year. Yes, what is the amount that is withdrawn from the Rera dressing account for the current year? Let us say 10 crore. Then amount withdrawn till date of 31st March 2020 from the commencement of the project, that is of 2015 onwards till date, that we are certifying. I will certify that name has been utilized only for the project, whatever has been money. So we are certified on behalf of the promoter that amount which has been issued in the project has been used for that project. That means 70% of the money is used for that project. We have verified the certificate, we have gone to the books of record, we are satisfied. It is in proportion to the percentage of the completion of the project. And if there is any variation, he has excess withdrawn, there is any deviation, then we have to qualify. So if there is a Rera dressing account, but if the money is put in the ordinary account and there is no proper procedure followed, in that case, all this need to be specified. So with this, I have tried to cover up the both the important aspects of certificate number 3 for the purpose of withdrawal as well as form number 5 related to audit. And as far as audit is concerned, again, there is a lot of tricky issues. There are various questions which have been asked in number of seminars. At the request of your convener, Ashutosh, yes, I have prepared an article on that, and that also has been shared, which you will be in a position to go through whenever you are doing the audit. At least go through that notes, which will help you. And there is a guidance note issued by the Institute of Chartered Accountant, which also you can refer on the certification and audit with this Rera audit. So with this, thank you very much. And if you have any questions, you are most welcome. Otherwise, as far as the time limit which is available to me, I have completed. You have still 5 minutes to conclude. Thank you very much.
Thank you, sir. It was very much pleasure to listen to you, and the presentation was very much informative. I request if anyone have any questions, please come forward and ask. Okay.
Yeah, I think they don't have the questions.
Okay. Okay, so I request CM Mukesh Soni, please come forward for vote of thanks.
मुकेश जी
थैंक यू श्रद्धा एक्चुअली सर लगता है आपने इतने सिंपल लैंग्वेज में एक्सप्लेन किया कि किसी को कुछ क्वेश्चन ही नहीं आया एक्चुअली इट वाज अ वेरी वंडरफुल सेशन देयर इज अ लॉट ऑफ डेवलपमेंट इज गोइंग ऑन इन भिवंडी आल्सो so many residential and commercial projects are upcoming like Godrej and Mahindra and Lodha. Lots of projects are
Yeah,
upcoming in
only
Bhiwandi.
I just conclude. Only give me 1 minute. I was just saying that it is giving you network practice. Why I said it gives a network practice, because as a chartered accountant you may be engrossed with your own tax audit and other issues, and then that promoter builder you are helping them. In that case, yes, you can still continue to help them with your work, and you can take let us say withdrawal certification. Once you take a withdrawal certificate, the audit cannot be done by the same person, so therefore you will have to refer to another friend of you and who can do the audit, and the other person who is doing the certification for withdrawal of their client, he can refer you for your audit purpose. So this way the networking is happening, because the same partners cannot do the audit. They have to be different. The second thing is there are various chartered accountants who are doing a representative practice. So maybe a promoter whom you are looking at, maybe you are already doing their work, either audit or the certification. They want to understand who can do the representation. Maybe you can understand the complications, then discuss with the another chartered accountant who is in a position to represent. You can take the work and do it jointly and represent jointly, so that you also get an opportunity to earn the fees even on the represent and learn. So this is also another chartered accountant you get. There are other network practice, as I said. There can you can take the help of this architect engineers who are involved in their developer. You are interacting with them, maybe they will have certain other work and all you will be able to get. So this way your network practice will definitely go up. That is what I would say. It is an excellent opportunity. One need to at least devote some time in understanding all this. Thank you very much.
Yeah, thank you, sir. Actually, may I ask one question? Like, there are three kinds of work which are CA is handling in Rera. The first one is like registration, and second is Form 3, and then Form 5.
Yeah.
So, can you highlight what are the like average fees charged by chartered accountant?
Yeah, very good question. Even yesterday I had a CPA study circle at Vasai. The last question was the same thing. So normally, for the purpose of registration, there are a lot of compliances has to be done, and a lot of documents need to be verified. And of course, the recommended fees by the institute is based on the number of hours that we put. However, I can only tell you that it is normal fee that is charged is anywhere between 50,000 to 1 lakh, depending on the size of the plot and the document and the services that you have to give. But minimum fees will be definitely 50,000, because lot of compliance and at least 2 to 3 days goes in that. The second thing is regarding certification is anywhere between 5,000 to 10,000. Though the institute recommends about 10,000 rupees fees, but normally it is around 20,000 to 30,000 rupees per year, depending on the. It is only always done on a retainer basis, irrespective of the number of certificate. Yearly basis, you can charge 25,000 to 30,000 for the certification one. And then comes audit. Audit again depends on the way we do the tax audit. Anywhere between 30,000 to 40,000 you can charge for the audit, because a lot of again verification need to be done, because it is not like any other income tax audit or this one. We have to bifurcate the entire expenses into two parts. One is for the administration marketing, and the other one is related to construction and land. So that need to be bifurcated, verified, understood, and then of course appropriation of those. Secondly, when it comes to the receipt also, you need to verify those receipts whether it has been drawing in the proper account. What is related to the allotee? Is there any other thing which has come? And allotee money should not be put in another account. As I was saying, in Gujarat, the chartered account has been parallelized. So therefore, when I have to look into all these aspects, so it is a lot of responsibilities are there, and therefore anywhere between 30,000 to 40,000 should be the reasonable fees. Yeah.
And I assume all the certificates require UDIN also.
Yeah, 100%. Without UDN, you cannot. Rera withdrawal certificate also needs UDN, and this also audit also needs UDN.
Thank you, sir. On behalf, this is CA Mukesh Soni. On behalf of Bhiwandi CP Study Circle, I would like to thank you. And it was a very wonderful session. We learned a lot about the Rera. Thank you. Thank you very much, sir.
Thank you, sir. I personally thank you for accepting your invitation. And Ankit has joined us.
Yeah.
Would you like to say something? Concluding remarks?
Yes. Thank you, Ashutosh bhai.
Yes,
Warm
please.
welcome to all of you. At the outset, I would like to thank CA Ramesh Prabhuji, very popularly known as Real Estate Guru. Sir, you have shared your knowledge of RERA and the practical guidelines and the practical advices in a very lucid manner. Earlier also, Ramesh sir has joined us in the RRC, and he is always available to guide all the members. Sir, we are very benefited with your expert guidance, and we'll always love to listen you. It's always a treat to listen an expert speaker like you. And we, with the bottom of my heart, thank you for your expert guidance and knowledge sharing. Thank you very much, sir. Over to you,
Thank you.
Ashutosh.
It is also great opportunity.
Yes, Ankit. Thank you. Thank for your those words. And I would like to thank Ramesh Babu, sir. Also, I'd like to thank my team, Mukesh, Soni, and Shraddha for today's hosting. I'd like to thank Sakshi for technical support. Thank you, audience, for your large participation. You made it possible. Thank you, sir. Thank you very much.
Thank you, sir.
Thank you, everyone.
Yeah, thanks. And I declare the program to be officially completed. Thanks a lot for joining us. See you tomorrow. Tomorrow we'll be joining with real estate income tax, and speaker will be Vimal Punamia, sir, 11 to 1. Thank you.
Okay.